How do we know the US equity market made a sustainable low? Let's review the last interview where a month ago we were at the S&P 310 and we had the impression that there was little upside and the possibility even of a correction. That's why we described these two paths, the green and the red path, for the month of August or possibly even in September. Well, basically a few days later, a correction started with the interest rates, which is here the green line, breaking below 194 on the US 10-year yield, at the same time that equity went down sharply. And it went down in a few sessions and then started to basically build a kind of a base. What's going to be interesting is to see what was in this base. That decline occurred, of course, in a typical risk-off attitude. And this risk-off attitude took place as the interest rates from 194 went to 147 during the mid of August. At the same time, gold was also rising, and people rushed into yen, which was rising here, as we can see here on these weekly charts, and even buying Swiss francs, where the euro Swiss was coming down during the August from 110 to 107. Right now, what we know is that we got a signal from the US market itself, given by the advanced decline line, this red cumulative line, which at the end of August made a new high. This is a very important level and signals because usually it postpones the all-time high for the large cap by 4 to 6 months in the future. That means that the breadth of the market, small and mid cap, are rebounding in a way that it postpones future highs. In fact, we need to do a little bit more of details into this analysis. And specialists like Lorries are analyzing the advances and the decline together with the volume going into price which are rising and price which are declining. And in fact, in August, we got very emotional days, several very heavy selling days. The last one being on August 23rd, followed right away after by strong buying, 2 days in a row on the 28th and 29th of August. And finally, the confirmation of the advanced decline line making a higher high on the 29th of August. This combination is usually a recipe for calling for a sustainable low that we got during the month of August and qualify for higher highs in the coming future above the previous high that we got here. We've got the S&P mid-cap, for example. So we see that in September, prices are rising, and therefore we have to review our previous red path, which was too bearish. In fact, these 2 weeks of strong rising price lead us to believe that we are going, possibly in the coming weeks, in September already, we are going to test the rising resistance trend line around 30.50 on the S&P 500, possibly break it. And according to the seasonality in October, we might have a little pullback, but a pullback which is going to stay well above the previous low that we got in August. Even in the two scenarios that we envision, one very bullish, which is the green path, going to make higher highs up to the year end and eventually in the first quarter of 2020. We can accept, in case of this scenario would be not as bullish as that it would at worst move sideways along the red path, but remains above the previous low that we had in August because of this strong signal and widening breadth that we saw in the US market. Of course, we will see internally in the US market which are going to be the leading sectors. There is currently a rotation, so we will have the time to discuss that in future interviews. But we need to know that right now, globally, the signal is also followed by the European markets with its relative strength bottoming versus the S&P 500, so they should benefit of it. And we see here the price action is above the cloud, the red area here. Also, the Japanese market has a little bit more work to do to break above its own cloud around 21,800. And we need to realize that during this period, the one area which is globally going to be lagging is the emerging markets, which here has a relative strength rebounding, but is still more work to do and is more in a trading range. So that's the basic message and the basic explanation for the sustainable low that we should have had in August. Thank you for your attention.